What's up, traders? Welcome to this week's episode of the Weekly Watchlist. It's going to be slightly different than others. I'm not feeling 100%, so if this is your first time tuning into an analysis, I apologize in advance. Go check out some of our other videos to see the normal production quality here. But anyways, we do a technical analysis, and I'll give you some of my thoughts on the broad market, on our core list of companies here, as well as some of the tickers that our Discord members did vote on, which we call the quickfire round. If you want to vote for next week, feel free to join the Discord by clicking the link down below in the description. It's completely free, and while you're there, also check out our other free resources. That being said, let's just hop directly into SPY weekly time frame and talk about candle structure and location as always. For structure, we just have a doji, right? A question mark candle indicating that neither buyers or sellers were really in control this week. It's really indecisive, and there's no confidence from either side of the trade. In terms of our location, it's keeping us within this sort of 3-week balance. And lastly, I will note that our volume is picking up here as we head into blue sky territories, which is a good thing because we can have more confidence when more market participants are involved here at these levels. So the more people who are involved, the more confidence you have. Let's go ahead and break it down into a daily time frame and talk about that 3-week balance in a little bit more depth. If we put our levels back on, you'll be able to see it here. And let's zoom in a little bit more. And there we go. If we bring this over, what you'll notice is this is the 3-week balance. And what we have to contend with here is the possibility that Thursday was a look above and Friday was a fail back down into this range, in which case the target is always the bottom end of the range, which would be down here at the 364.22 mark. Well, I would only really classify that as the target if this key area of support breaks. We have a horizontal level as well as support trend line, which really acted as huge support there on Friday afternoon when we caught that bid out of nowhere towards the end of the day across the marketplace. So if that fails, then yes, I would target that 364 mark. But because we have this hammer, because it's happening on really high volume down here, I will say that I'm sort of biased to the upside early on in the week to see if that buying pressure continues to the upside. If we can get a break back above sort of these highs in here around that 370 mark, of course, retarget the all-time high, and anything above will be blue sky levels, whole and half dollars, intraday levels that do form. So on the Qs, it's a similar picture, right? We have a hammer candle that printed off on Friday, but the difference is that it's up here at all-time highs. So if we continue higher, then it's just blue sky territories right after this. There's no other area that we really need to break through before we get there. An interesting thing to note as well is that our support trend line from the past is now acting as resistance on the back test. And I'm not really thinking that the Qs want to go completely parabolic and break back above it and then use it as support. So I'm sort of under the assumption that if this hammer results in more of a bounce, it's going to look something more like this as opposed to more straight up, something like that. If we go lower, key support is first here at 308.50, excuse me. And then if we go lower, 305, the whole dollar mark, it was prior resistance, then turn to support on this hammer right here. Anything underneath and the low of our liquidation break from this day back here is really that $300 psychological target. That would be a key support I would be watching out for here on the Qs. But again, with this hammer candle that printed on Friday on pretty strong volume, the general impression is that it will continue slightly higher into the earlier parts of next week, and then we will have to reassess after that. And lastly, for the broad market, we have IWM, Russell 2000, and our small caps. And we have a totally different picture here because we actually have an inverted hammer as opposed to a regular hammer. That being said, the implications of this are that we may continue a little bit lower, and you'll notice that I've drawn in this sort of 3-day support trend line. If that breaks, then that would be the key for lower in my estimation, in which case the target will be the high of this prior balance area that was here in the chart. That's at 191.66. Anything underneath will be the low end of that balance there at 187, and then one more will be the top end of this balance, right? We talked about this for so long that IWM has just been going from balance to excess to balance to excess, but that would be down there at 182.26. Again, that's only really going to be in play if this 3-day support trend line breaks. If we consolidate within this sort of triangle, that would be more balance in my estimation, and IWM may start to see more excess over that all-time high there at 197.83, in which case we're just playing blue sky levels, whole and half dollars, intraday levels that form. I'd especially be on lookout for that 200 psychological mark. And while we're here talking about the broad market, I will also say that this week will be a shortened trading week because of the Christmas holiday, so half day on Thursday. I'm not entirely sure if people will be trading from home as they have been for quite some time now, and if that will lead to lighter volume, but just keep it in mind, with a shortened trading week, sometimes also comes lightened trading volume. Jumping into Apple, what I want to see happen here is this is a breakout of our 2-week balance, right? So I want to see this 125 hold as support, a retest of the 128, and then a breakout into this section of the chart where we have very little overhead resistance. If the 125 fails, though, just simply look to retest the low end of that balance there at the 121. Anything underneath, we have 119, the super support with the 50 SMA. On Netflix, we are breaking out of this ascending triangle we talked about in last week's episode. The hammer candle and 2-day balance on Thursday, Friday would lead me to believe that the move wants to be higher, sort of into this 550 area of resistance. Anything above is 557, then the all-time high after that. To the downside, if we get a retest of this area, right, the breakout zone, I would want to see that act as support, and if it doesn't, then look to retest the support portion of the pattern, which could be anywhere from 505 to 510. Tesla, nothing to really say here other than, wow, absolutely impressive move there on Friday afternoon. I'm not even entirely sure if this candle is reflecting the true price action there. But anyways, with inclusion in the S&P on Monday, there's really nothing to do here until after that dust has settled. We have areas of support below us mapped out, and we know that blue sky levels on this one will be $5 marks, $10 marks, $25 marks, $50 marks. Alibaba is in a bit of a new balance, right? We haven't really done anything other than go sideways in this area, and we're trading down towards the bottom. So with a red candle like this on Friday, I do think the move will be lower to retest the bottom end of the balance or support here at 253.81. If that breaks, 200 SMA is below us around 245, and anything underneath will be our next support below at 241.05. To the upside, we do still have these gaps that are remaining unfilled. I'm not necessarily thinking that we want to go there anytime soon, especially with what I believe was some bad China news over the weekend. So, although I'm not a very news-driven trader, it's something to keep in mind when you're trading stocks like this that are heavily impacted by, global trade like that. So keep that in mind. Again, the technicals here are pointing to potentially lower into this double bottom and support area at 253. Facebook has been a tricky one. It seems like it has wanted to break down below the support trend line a number of days, and then it gets sucked right back up towards the end of the day and respects the pattern. So whether or not we break or hold this support will be key to the rest of the week, obviously. If we hold, then we're looking for a move higher to retest the top end of the triangle that we're in. If this hammer results in a bounce, that's what we're looking for. We first have to clear this 278 mark and then come into our 286. It could sort of act as super resistance depending on time of week and when we actually come into that top end of the triangle. To the downside, if the triangle fails, then we're starting to see a breakdown here in Facebook, in which case we're just going to target here at 265, anything underneath. A lot of key touches from in here at 259, and then you'll notice there's really a ways to fall all the way down to 244.19 on Facebook, if we start to break down out of this symmetrical triangle. And because this is, such a long tightening pattern, right? We've been in this triangle since late summer. The breakout or breakdown on this could really be significant, and I'm not necessarily ruling out of the picture a move to fill this gap below all the way down to 234.69. NVIDIA also printed a hammer candle there on Friday afternoon, just below our 50 SMA here on the daily time frame. We'll get rid of these because they're slightly distracting. It was a little bit of a 3-day wedge we were talking about in the Discord. But if this hammer results in a bounce, we first have to clear this area of resistance here, that 50 SMA, which let's just put a value to it. That is going to be at that 536.26 mark. If we can clear that, look for a move into the top end. You can see, just look at all these touches in here. here at the 544 mark. If we can clear that, then I would expect a stronger breakout into here around the 573.50 area as noted by prior resistance, and then the all-time high after that. That is, of course, if that hammer results in a bounce. If it doesn't, a lot of support below us. We have here super support will be at support trend line and the 515.50. Anything underneath 504, 500 psychological, and then 492 will be sort of the last one we talk about today. Microsoft has been a pretty choppy one to trade as well, but finally starting to see a move to the upside and a little bit of a manageable pullback here on Friday with this doji hammer that's formed. Again, the implication is that it will go higher early on in the week. So if we can clear and take out this set of highs in here, let's assign a value. That's around 220.15. If we can take that out, look to retest our 225 just about as noted by prior resistance and resistance here, then the all-time high after that. To the downside, if the hammer does not bounce, we have the 50 SMA, which would be my first target below around 214.25. Anything underneath, next area of key support is from all of these lows in here around 210.62. And lastly, we have Amazon for our core companies. And again, we are sort of starting to break out of this symmetrical triangle that we're in on the daily, but this move back down lower is a little bit concerning, right? If this truly was a breakout to the upside, you would have wanted to see it at least go sideways up here and not pull back as aggressively. The key saving grace is that we are maintaining and holding above that 50 SMA now, so if we can maintain that, do look for some more upside targets, maybe again a retest of this area around 32.35, 32.40, and then come for that 3,300 round psychological number to the upside. Anything above is 33.65. To the downside, if the 50 SMA fails, we're looking to come back into this area of key support, right? So boom, it would be a break here to this 3,100, and then anything underneath is 3,000 psychological. Starting off the quickfire round with PLTR, this inverted hammer would lead me to believe that we do see some more sell-side activity here. We will need to break key support at 25.50, in which case next target below is at 21.16, and then the 50 SMA isn't really mature enough for me to have confidence in that level. Next key support below is at 14.50. To the upside, if we come back into this range and this inverted hammer does not result in more selling, just look out for resistance here at 28.10. Then it will be a break to the upside of this symmetrical triangle, in which case we have targets at 31.25 and 33.50. But again, with the inverted hammer, I am sort of looking for a little bit more downside here in PLTR. So Marvel did set a new all-time high at 48.42, but we have another inverted hammer. So the general expectation here is a pullback after we see the sellers take control in that upper wick. So 46 is the first key area of support. Underneath that we have, I would really actually just get rid of this area here at there. So boom, get rid of that. Next key support below is the 50 SMA, and just below at 42.27. Upside targets will be blue sky levels, whole and half dollars, intraday levels that form. Keep an eye out for that $50, nice round number to act as a magnet if the move is up in the latter part of the week. So absolutely impressive move here on Peloton. We will mark off this prior all-time high, and we're kind of getting a little bit of indecision at that level just now. So this also strikes me as a key area on the chart, so we want to have that in there at 132.58. If we pull back, look for consolidation in this area, and then maybe a break higher. That would be a nice bull flag. But if we start to go lower, next key support will come from these sets of highs in here. It also coincides with these lows as well at 118.93, so call it 119 the whole dollar. 50 SMA will be there. Again, with this strong move in the upward direction, I'm not anticipating a full-blown reversal. I just want you to have the levels. Again, I think the likely scenario is some sideways action, maybe a break higher in the latter part of the week. This candle is indicating a little bit of indecision. So BIDU is a victim again of more inverted hammer candles up here at all-time highs after a really, really impressive move to the upside. So again, the expectation is some more pullback. You'll notice here that we had an inverted hammer, and although prices didn't move higher, they also didn't really pull back aggressively. So it's not going to work every single time when you see an inverted hammer like this, but do keep in mind that that is the general expectation. Resistance is up here around $200, the psychological mark. So if we can clear that, blue sky levels, whole and a half dollars, intraday levels that form. To the downside, if that pullback develops, I'd be watching out for that 185.55. Anything underneath is really the bottom of this large green-bodied candle around 168.21. So Etsy is one that we have not marked up yet. We are in a 2-day balance from Thursday and Friday, so watch out for that. A break over the highs would set in motion a new uptrend, or not uptrend really, but just continuation higher. And again, same thing as what we looked at on Netflix with that hammer candle forming on Friday. The expectation is higher. Underneath those lows, though, if we get a failure and a move back lower, we're looking out here at 170.75 as first key support. Anything underneath will sort of be this zone in here around 153. It also coincides with a prior high, so I actually really like that level, and we'll leave it off at that. So Bank of America here, I know there's some news with a bank buyback program. I'm not entirely sure what that all means. I haven't done enough learning about it to really give you a formulated opinion on it, but just in terms of the technical chart here and what's at play, we are stuck in a balance, right? We talk about balance, excess, excess. We're in the balance, and right now this inverted hammer that formed on Friday would lead me to believe that we're coming into the low end of balance next, which would kind of be in here around that 28.15. If that happens and we see more lower prices after that, we're looking at 27.85, and then the low end of this balance, right? So many balances to keep track of. I would call this I'd call it here first a key area of support around that 26.63. That's quite a ways away. Banks would really need to fall apart. And again, with that news, which I don't completely understand yet, I'm not going to make any crazy, claim that it's going in one direction or another. Great pressure cooker top forming up at the highs, though, so a clearing of 29.19 could really set this in motion to the upside here. Very little resistance to our left. You'll notice it's just really that emotional selling from when the major sell-off happened earlier on in the year, almost a year ago now. Kind of crazy to think back on, so it could really get going over that 29.19. XLE is the S&P energy sector, so kind of a cool one. We never really dive into sector analysis unless you watch the midweek market update, but for now, we are looking at a bit of a balance. I would say looks something like that, really tight range, right? So if we break down below these lows, we're targeting here the 36.80. If we break out above these highs, first target is here at the 42.05, and then anything after that will be, if we scrunch up the chart, as noted by what's happening in here, we'll pick this high from here. That's going to be quite a ways up at 46.75 just about. So really tight area of consolidation that we're kind of sitting in right now, and you have the targets up and down. HCAC, not entirely sure on this one as well. It is an acquisition, so a special, one of these special things that can't really fall below 10 if I remember that correctly. So here, what we're looking at is just really a tight consolidation. If we draw in an area of resistance, something like this, and then an area of support, you'll notice that we're just tightening up this range here, and we're waiting for a break one way or another. If we can break out higher, then we're looking for a move here, into first the 22.42. Anything above that is 2042, and then the 22.42. Kind of ironic that they're so similar. And then anything underneath, key support is here at 18.50, and then underneath here at 16.63. Gap fills to the high of this candle at 13.45. That's quite a ways lower if this breaks down. Checking in on Qualcomm, I think we talked about this one in last week's video, and what we've done is partially filled the gap to the upside, but because we should have filled it quite easily and we didn't, that's kind of indicating to us that the sellers are actually stronger than we think, and in my estimation, we should be seeing a move back down to the lows in here around 142. 50 SMA will be there as well, so I'd be watching out for a super support sort of bounce if we get there when the 50 SMA gets there. To the upside, if we do fill the gap all the way, though, our next target is here at 159.15 before we get to the all-time high. And last but not least, we have BYND, which is sort of trying to break out of this really tight range that it's been in for quite some time. But what we'll notice is that if we draw in another area of resistance, we're kind of still, getting held down by that level. If we can get some clearance above here, that 145.11, then sure, I would expect a little bit more upside action. But until we see that happen, just remaining in balance is the key. Anything above 50 SMA is first target, and then here at 158.55. Above that is here at 172.19. If we fail here, let's say we get a look above and fail, you know what the target becomes. It's the low end of balance down here at our 135 whole dollar, anything underneath, 200 SMA, and then our 123.60. That's going to be it for this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, then feel free to let me know down below in the comments section or by simply leaving the video a thumbs up. Again, I apologize if this is your first time tuning in for sort of a low production value. Again, just not feeling 100%. So that being said, enjoy the shortened trading week. Have a great holiday sort of season. I wish you all the best and have a great trading week.